Good afternoon, everyone, and welcome to the webinar. My name is Defina Williams. I'm OFN's Executive Vice President of External Affairs, and we are so excited to have you all joining us today. A couple of quick housekeeping notes before we get started. We do have a pretty large crowd today, so to keep things manageable, please use the chat function to connect with your colleagues and the Q&A function to ask any questions. We'll try to answer as many of them as we can at the end of the presentation. We'll also be recording and posting a recap with a link to the presentation on our blog in a couple of days. Next slide, please. So today we are so excited to have a guest speaker, Deputy Assistant Treasury Secretary for Community Economic Development, Noel Pollo, who we will hear from in just a moment. After that, we'll launch into our presentation where you'll hear from OFN's policy team with updates on our 2023 policy priorities, what to expect from the Biden-Harris administration this year, what's happening in Congress, and finally, how you can get involved and advocate and support CDFIs this year. Next slide. So with that, I'm going to turn it over to Noel. Thank you so much for being here. Take it away.
Thank you, Defina. Again, my name is Noel Pollo. I'm the Deputy Assistant Secretary for Community Economic Development or Treasury. Really appreciate OFN giving me the opportunity to speak with you today. And, I want to talk a little bit about the future. It's been an exciting 2 years to be in the CDFI industry, to be in the CDFI space as a practitioner, as a policymaker, as a funder. Over this past 2 years, we have seen the capacity, the ability of CDFIs to respond to crisis in a way that we just had never seen before. And so CDFIs were, on the minds and on the lips of policymakers as we were responding to the COVID crisis. As many of you know, I was in the industry running a CDFI, leading a national organization of CDFIs, and trying to make that case along with all of you. And it's been my privilege to come to the Treasury Department and play a role in policy at an exciting moment like this. And the $12 billion that the Treasury Department has put out into the field, or is putting out into the field through the Emergency Capital Investment Program, the CDFI Rapid Response Program, and the CDFI Equitable Recovery Program, which is soon to be released, is really a game changer for the field, as you all know. And so I think it also forces us to think about the future of this industry in a different way. No longer are CDFIs sort of the best kept secret of our domestic economic policy. The folks over there that do good work, never to be recognized, right? CDFIs are on the front pages. They're being highlighted at the highest levels of our policy. And I think it's now a place where lots of people want to be, right, in the CDFI space. And this, the CDFI Fund in particular, as you all know, was founded almost 30 years ago, in the mid-90s. And the CDFI certification particular, this process by which CDFIs are identified by the CDFI Fund and certified, has not been updated since that time. And so as we think about the future of this industry, clearly we have to think about the certification process itself. And there is, as again, many of you know, a process of updating certification that's been going on. We received a great many comments in response to the most recent application that was put out for public comment last fall. And really, it was the best of the CDFI industry. That is to say, we got a ton of really specific, really helpful comments and feedback. And the CDFI Fund team is in the process of going through every single comment, really considering this. And as was said in a public statement that was released in January, you can expect that all of those comments will be responded to, and that the form itself that was put out will undergo some revision in response to those comments. And so we're excited about that process. It's really critical because the CDFI certification is something that really was not designed to bear the weight. And it is weighty, right? What it is now to be a CDFI, because so many government programs now, I think, point to CDFIs as, eligible applicants or as being an important characteristic. There are regulators that use CDFI status to confer certain benefits or to identify certain data. Private investors use the CDFI certification, in some cases, almost as a litmus test about whether an organization is eligible or not for their funding. And so there are a great many things that CDFI certification is used for today that it was not before. And we are looking to make sure that that certification can hold the weight in a way that it wasn't necessarily intended to do 30 years ago. But we also want this certification to reinforce that this is a big tent field. And what I mean by that is CDFIs include banks and credit unions, the depository institutions. It includes loan funds and venture funds. It includes very large organizations and very small ones. It includes organizations that are looking to do a great deal of lending and scale. And it includes organizations that are looking to do the hardest loan in the most difficult place to confer capital in this country. And so that is an enormously diverse field that we have. And that is one of the best things about CDFIs. And so know that at the Treasury Department, we see that as a value, and we want to make sure that our certification and our funding programs support, right, that big tent vision of the field moving forward. We also want the certification to be clear about sort of guardrails and making sure the CDFI certification really means something moving forward. And so all of that, I hope you will find reflected as we move forward. We've said that we will we're delaying the opening of certification past the April date that we had originally put out, 6 or 9 months ago, or even longer ago. But it's not going to be, it'll be on the order of months, right, as opposed to a year or more. And that's what you can look forward to as we finish that work. But the CDFI Fund team is doing a great deal. You know that they are getting out the typically annually appropriated programs. And very soon, we're looking forward to announcing the Equitable Recovery Program. This is going to be another landmark moment for the CDFI Fund when the largest single grant program in the fund's history, $1.75 billion worth of B, is going to be announced very soon. As I said, the CDFI Coalition just a couple of weeks ago, we're getting very close. We're very closer today, and looking forward to that big announcement here in the coming weeks. The president's budget is also an important marker for the CDFI Fund, as it is for all federal programs every year. We're proud to see the president proposing another increase in the CDFI Fund's budget. There's been a real commitment to the fund from this administration. You will also see beyond the increase in the budget itself, the dollar amount, some legislative proposals. And I call those to your attention because so much in the CDFI space has been about big numbers lately. But we also know that it's about getting the weeds right. And there are some statutory fixes that we are proposing with respect to the bond guarantee program and the capital magnet fund. That these are programs that have been operating for 10 years or so, maybe a little more, maybe a little less. But we've learned what makes them, what can make them more effective. And some of those things are not within the power of the Treasury Department, CDFI Fund. They're statutory questions. And so we have raised those up as very weedsy, kind of boring things, but I love boring finance. And we hope to engage in discussion about those legislative proposals. I said it before, but I want to say it again, that the staff of the CDFI Fund has just been extraordinary this past couple of years. I hope that you will all join me in appreciating how hard they've worked, how much they've achieved by getting out the rapid response program, by continuing to get out the regular annual programs of the fund, including $5 billion rounds of the new markets tax credit in the past couple of years. All of this work on CDFI certification The Equitable Recovery Program has been a gargantuan lift. And so I just want to reflect on how much good work that team is doing. And also recognize that recently the CDFI Fund Director, Jody Harris, has announced that she'll be leaving Treasury. She has been a tremendous asset and value to this team. But in part due to her great leadership, the fund is ready. The team is in place and ready to support a new leader. We will go through a deliberate process to identify that person. But in the meantime, we've got a strong leadership within the fund to continue moving forward. So those are just a few items here on the horizon. I hope you will keep a sort of forward-looking or future-looking view of the CDFI space, because as exciting as these last 2 years have been, I think we've got the most exciting years in this industry ahead of us. So with that, Defina, let me turn it back to you and say again, thank you so much for this opportunity.
Thank you so much for joining us and for those remarks. And I want to open it up to anyone who wants to type a question in the Q&A function. But in the spirit of your remarks about being forward-looking, what advice, if any, do you have for CDFIs that are trying to prepare for what may come from this updated certification criteria? Is there anything that we could be doing now to be ready for what might come our way in a few months?
Yeah, to be honest, I don't expect that CDFIs are going to have to, do something terribly new, right? I think there is going to be one of the issues that has been raised in the industry, and I know because I raised it when I was out in the industry, was that certification is sometimes not clear enough. We really want to understand better exactly, how and why, and so this process has been about providing real clarity, right? So that it is frankly easier to approach the CDFI certification process and become certified and maintain certification. And so I think that, my guess is that most CDFIs, the vast majority, are not going to find this certification update to be something that they need to prepare for in a big way. The goal is to be clearer, right? And it's been interesting that we've gotten some comments about, particular points, in the certification process where people point to them and say, well, what is that? When it's been actually a policy that's been in place for quite some time, but it does say something that they didn't know, right? And so again, trying to get out there and be really clear and transparent with the industry is among our top goals with the process.
Great, thank you. We have a couple more questions that have come in that not surprisingly are around timing, both if you could be any more kind of specific around when the ERP award announcement might come or certification. I'm assuming probably not, but those are the questions that are coming into the chat.
Yeah. ERP is coming precisely soon. I hate to be cagey. We're getting there, but this is, I hope everyone will agree, a big deal, and we need to make sure that we're doing it right. The team has really put a ton of effort into making sure that this is a well-run process within the fund. And so that's, my guidance to the team has been, look, if it takes a minute more, do it right. And that's exactly what they've done. And we're getting to the finish line and really excited about it. And similarly for certification, I was not entirely cagey, but, I said on the order of months, right? But this is, we're not delaying this by another year or that sort of thing, right? So there will be more to come on certification from the CDFI fund. But I wanted to give that sense of time.
Great. And I think we have time for one more, and this is about native CDFIs. So is asking if Treasury and the CDFI Fund are monitoring legislative proposals to create relending programs for native CDFIs to improve access to federal direct loan programs like Section 502 at USDA. So if you all are sort of staying on top of what's been happening in other parts of the federal government.
2 points here. One, I talked about a big tent. Native CDFIs are a really critical and distinct group within the big tent of the CDFI community. And it's just a great example of, look, different business models, even among Native CDFIs, right, to respond to really different conditions in Native communities. It is so important for us to be able to have that capacity within the tent, right? And so it is a really valued group within the CDFI family. And yes, absolutely, we keep our eyes on what else is happening throughout the federal government, try to be in communication and collaboration with our colleagues across the government. But the CDFI Fund also, recognize when there are opportunities that other federal agencies have to engage CDFIs, and that's in their lane. And we try and stay in our lane with respect to the details of any of those programs.
Great, thank you so much. And I know on behalf of all of us on this call and at OFN, we really appreciate the hard work that you all are putting in at Treasury to not just modernize certification, but to continue to make sure that funds are flowing to the industry and just really being the voice of the CDFI industry within the federal government. So we really appreciate your time today to join us, and look forward to continuing to engage with you as we wind through some of this great stuff that the fund has coming up in the next few months. So just want to say thank you again, and you are welcome to stay, but we can say goodbye to you and we'll move on with the rest of our presentation.
I'm grateful for the opportunity. Take care all.
Thank you. All right, so thank you to Noel for those excellent comments, and we are going to keep things moving with the rest of our presentation. So we want to spend a little bit of time talking about OFN's 2023 policy priorities. And, we really set our policy agenda each year by taking stock of what's happening here in DC with Congress and the administration and with federal regulators. But we also base it a lot on the information and feedback and priorities that we hear from engaging with all of you in our membership. So in 2023, our priorities are really organized around a few key themes. The first is to secure at least $1 billion in grant funding across the federal government. So you'll hear later in the presentation that this is a pretty tight spending environment that we're in when it comes to securing large increases in any individual grant program like the CDFI Fund programs, but there is still a lot of opportunity across the federal government for CDFIs to access grant funding from different agencies like the EPA's Greenhouse Gas Reduction Fund and other programs at USDA or HUD. So we are looking to really help CDFIs access those funds. But there's also a lot of other opportunities across the federal government to increase CDFI access to other federal credit programs and loan programs. A great example of this is some of the work that's being done both on the Hill and in the administration to increase access to the CDFI bond guarantee program by lowering some of those barriers to entry. Another big priority this year is really highlighting and focusing attention on the role of CDFIs in climate and resiliency finance through programs, again, like the Greenhouse Gas Reduction Fund, but also other programs at EPA, at the Department of Energy, and at other agencies that received big influxes of funding through the Bipartisan Infrastructure Law and the Inflation Reduction Act. We're also focused on making it easier for the private sector to work with and invest in the CDFI industry, whether that includes things like the New Markets Tax Credit Program or exploring other potential ways to kind of incentivize those tech investments in CDFIs through the tax code. And we're still also paying close attention to policies that impact or promote fair lending and consumer protection. So that includes things like the reforms to the Community Reinvestment Act, but also looking at things like the rules on affirmatively furthering fair housing. I think finally, another issue that we just heard from Noel about that's been on a lot of our minds for months is the reforms and modernization of CDFI certification and some of the CDFI programs. So if you want to know more about OFN's 2023 policy priorities, by the end of the presentation, we'll let you know where you can actually find the document that contains a little bit more information and gives some more kind of concrete examples of some of the programs and areas where we'll be focused in 2023. Next slide. So now let's turn to some updates from here in DC. In 2023, we are in the last 2 years of the first term of the Biden-Harris administration. We also have a divided Congress and a Republican House that's really kind of slowing down the potential for any new major legislative victories. But there's also a lot of program implementation that's happening on the administration side from major pieces of legislation like the Inflation Reduction Act. So we expect to see a lot of executive branch activity going forward this year, and there'll be lots of chances for CDFIs to weigh in on federal policy at the agency level. Next slide. So let's talk a little bit about certification. We did just hear from Noelle a little bit about some of the timing, which sounds like it'll be not next Tuesday like we expected it to be, but sometime in the coming months where we'll see that updated application. But, OFN really is supportive of the CDFI Fund's efforts to modernize certification, to make sure that there are guardrails that can keep out bad actors, but also to make sure that that certification is keeping pace with changes in the broader financial services industry and the CDFI industry, with so much new capital and interest flowing into the sector. And so it's really important for the CDFI Fund to have those tools to be able to determine who's truly advancing a mission focus, but also that we're really able to understand who's applying for certification and to build an actual picture of the CDFI industry. But we also recognize that there are places where the proposal didn't get it quite right and where it fell short and where there might have been some overcorrections. And so we've worked closely with many of you to review the CDFI Fund proposal closely and to put in comments about some of those areas where there's an opportunity for some improvements and some tweaks to make sure that this works well for the industry. So we saw the revised application in the fall, and as Noel said, they're weeding through all of those comments right now. But we're also continuing to engage with them on some of those key areas, like how development services are counted towards the financing entity test, and looking at some of the responsible financing guidelines and just making sure those are appropriate, and other changes that we would like to see the fund make based on feedback from all of you. So while we don't have a firm timeline of these changes, and we know Director Harris is in her last month on the job, we know that the fund is working on this, and we will keep you posted as we learn more about any opportunities to kind of engage with the CDFI Fund as they think through these next iterations of the process. So for sure, more information to come on CDFI certification in the next few months. Next slide. But that's not the only place where the CDFI Fund is actually asking for input and feedback and thinking about making some major changes to some of its programs. So there is a current public comment period open on the CDFI Financial Assistance, Technical Assistance, and Native CDFI Assistance application. So this is the first time we've really seen any substantive changes to these applications since around 2017. If you were planning on just kind of bypassing this request for comment, I would encourage you to actually take a closer look and really think about weighing in, because the fund is asking some pretty substantive policy questions that will impact the direction of the application and who gets funded, how much funding they'll get, and what types of information the fund is going to be looking for when evaluating those applications. So I wanted to just touch on a few of those big policy questions. This is by no means exhaustive. I do encourage you to actually read the request for comment. And like I said, think about weighing in, but a couple of things they're going to be thinking about are how to measure economic distress. So the fund is considering developing place-based definitions to measure economic distress in the communities where CDFIs are working. So looking at things like median family income, unemployment, poverty, historical poverty, percentage of other targeted populations in census tracts. So trying to understand how economically distressed the areas you're working in are. They're also thinking about deep impact and what that means, and thinking about incorporating your reach into some of these deep impact areas into their evaluation, using some of the definitions from the Emergency Capital Investment Program, or ECIP. So deep impact defined as things like lending and investing to low-income borrowers, to underserved small businesses in persistent poverty counties, in Indian country, deeply affordable housing finance. So really just looking at some of those ways where those dollars are really going deep to address concerns on the ground. They're also asking questions about the net asset ratio. So the fund wants to prioritize FA awards to CDFIs that they say are most effectively leveraging their balance sheet and focusing on CDFIs where the FA is really going to help grow and get you to that next level. And so they're asking if, is the net asset ratio an appropriate measure to assess that? And if not, maybe there's something else. There's also a lot of questions around the small and emerging CDFI assistance, or the CECA program. So they're asking a lot of questions around CECA, including whether there should be a maximum number of CECA awards that a CDFI can get before they have to move into the core or kind of bigger program round. They're asking questions around the asset size threshold for what is considered to be a small institution based on entity type, so small banks versus small loan funds. They're also asking a lot of questions around the appropriate funding level for CDFIs. So should larger CDFIs be limited on the total amount of FA awards they receive within a certain time period? And what those thresholds should be, what's considered a large institution, similar to asking questions around what's considered small. There's even a fill in the blank question, which I think is the first time I've ever seen that in a request for comment. So basically the CDFI fund wants you to fill in this question. CDFIs with asset size over blank can receive a maximum of blank dollars in CDFI program FA awards every blank years. So I think, really looking for some direction from the industry around how these awards should be deployed and how often and how large those awards should be. And then finally, asking about, the need for FA as far as viability for CDFI. So I think we've all kind of known for a while that, CDFIs really shouldn't be depending on receiving a financial assistance award in order for your budget to work, or in order to be able to survive from year to year. But the fund is actually being explicit about asking about that and making sure that the organization can continue to operate as a CDFI even in the absence of getting an FA grant. So that request for comment is open on all those policy questions, as well as some more typical kind of Paperwork Reduction Act questions around, word count and whether the questions are appropriate to kind of get at what the CDFI fund is trying to evaluate in the application. And the idea of collecting this feedback now is that they'll take that public input and incorporate that into the next application round. So that's part of the reason why we're going to see a combined funding round in the fall for FY23 and 24 will be combined in one kind of large funding round so that they can incorporate all of this feedback. OFN is definitely planning on weighing into this request for comment, and of course would love to hear your thoughts and feedback around what the future of the financial assistance program should look like. So I highly encourage you to get in touch with me. We'll have our contact information for the whole team up at the end, but we'll also be thinking about other ways to engage with our membership to solicit your feedback on this very important request for comment that's open right now. Next slide. So some other CDFI fund updates on some of the other programs. The BEA program, we will see a combined funding round for FY22 and 23 and expect that program to open in the spring. The Capital Magnet Fund application just closed. As Noel mentioned, their Treasury's been looking at some kind of substantive policy changes to that program as well to help recipients really better address the affordable housing needs. Those awards will be out in fall of 2023. The CDFI Bond Guarantee Program, we are expecting the NOGA to open any day now. OFN is considering submitting a bond proposal this year. So if you are interested in learning more about the program or interested in potentially applying, please feel free to reach out and I'll make sure to connect you with our BGP team here at OFN. Equitable Recovery Program, as you heard, very soon, those awards will be announced. And then on new markets, the application just closed recently, and we expect those awards to be out in the fall as well. And work is continuing on the Native initiative that the CDFI Fund is undertaking to increase Native CDFI participation in new markets and Didn't make it on the slide, but the small dollar loan program, that's also going to have a combined FY23 and FY24 funding round, and we expect that program to open in the fall. Next slide. But that's not all that's going on in the federal government. So there are some new regulations that are coming imminently. One that will impact small business lenders is the Dodd-Frank Section 1071 data collection rule that we expect to be out by Friday. There is actually a deadline that the CFPB has to meet to release that final rule. OFN member Axion Opportunity Fund is actually on the Hill testifying before the House Small Business Committee today in support of Section 1071. And so there's definitely going to be more to come from OFN once we actually see what that final rule looks like and learn a little bit more about the implementation timeline. But, expect to see that coming out in the next couple of days. We are also waiting on a final rule on reforms to the Community Reinvestment Act, which we were expecting to see maybe this summer, but that timeline might get a little bit delayed as regulators are grappling with the current regional banking crisis. But again, we are expecting to see some kind of interagency CRA rule, summer-ish. And then the SBA also proposed lifting the moratorium on small business lending company licenses that has been in place for decades, and also putting in a new designation for mission-based lenders to be able to access those licenses. So there was a lot of concern, I think, early on when the proposal first came out about the future of the Community Advantage program and how these licenses would interact with that. SBA Administrator Guzman just confirmed on the Hill that she is committed to the Community Advantage program, but also that the proposed rule would provide a more permanent path for Community Advantage lenders to remain in the 7A program and provide more certainty than the pilot program provides right now. And she also expects the SBA to be able to expand the number of new lenders with licenses and to be able to better streamline the underwriting process. So more to come there as well. That's something we're watching very closely and have been weighing in with SBA to make sure that the changes really do provide an opportunity for mission lenders and the communities that we serve to have access to the 7A program. Next slide, please. And then finally, before I turn it over to my colleagues, the Federal Home Loan Bank System has been going on a listening tour with the Federal Housing Finance Agency, really for the past several months, trying to hear from its stakeholders about, the future of the federal home loan banks and the mission. And of particular note about this process, I think, is that FHFA Director Sandra Thompson specifically has asked for CDFIs to really weigh in on these changes and, has stated repeatedly that she wants to hear from CDFIs about how we're working with the Federal Home Loan Bank System, how well it's serving you. So OFN actually worked with the FHFA staff to provide names of certain CDFIs that we think should be invited to these roundtables. OFN's interim president and CEO, Beth Lipson, as you can see in the picture, participated in that first roundtable here in DC. And this was really an opportunity, again, to learn what's working and not working. The comment period to sort of submit any final thoughts you may have on the future of the federal home loan banks, it closes on Friday, the 31st. So if you have thoughts or interested in weighing in, I encourage you to do so before that deadline. Next slide. Great. So with that, I'm going to turn it over to my colleague, Mary Scott Bayless, to talk about green and what's going on in Congress.
Thanks, Stefina. So as Stefina has already mentioned, one area that we are closely tracking this year is around climate finance, and particularly implementation of programs from the Inflation Reduction Act that passed this past August, such as the Greenhouse Gas Reduction Fund. So the Greenhouse Gas Reduction Fund, it's a pretty large program. It's $27 billion being administered by the Environmental Protection Agency, the EPA. And that $27 billion is split into a couple of different pots. So there's $7 billion that is competitive grants for zero emission technologies. So that's really focused on community solar, rooftop solar, and the infrastructure and storage capacity for that sort of those sort of projects. Then there's 20 billion that will be financial and technical assistance to projects that reduce or avoid greenhouse gas emissions more generally. And of that 20 billion, 8 billion is specifically targeted for grants to low income and disadvantaged communities. So EPA is in the process of writing the regulations and coming up with the structure for this program. OFN and several other CDFIs and partner organizations have been advocating to EPA to be sure that they understand that to reach low income and disadvantaged communities, they need to partner with CDFIs, across the federal government with multiple different programs, from the Paycheck Protection Program to many others. We have seen that unless the government partners with CDFIs, it's very difficult to get the financing into the communities that they're targeting. So last month in February, on Valentine's Day actually, EPA released some details about what they're thinking with these awards, but there's really still a lot to come. So what they were able to say about the $20 billion is that they anticipate making somewhere between 2 and 15 awards from that pot of money. So this is a pretty big win that they're not going to make the award to just one entity to set up a national entity and distribute all the funding. They're looking to make multiple grants. So we're happy about that. They are probably targeting still a smaller number of grants. And they have said that they are looking at an intermediary model of making a few larger grants and then the intermediaries dispersing the funding more broadly after that. We are expecting the funding notice to be released sometime this summer, probably in the early part of summer. I think June is most likely, but it's a difficult program to put together and there's a lot of competing interests, so it may take EPA a little bit longer. We are focused on ensuring as much of this financing gets to low income and disadvantaged communities and on into CDFIs. So we are in contact with members of Congress, EPA, and other parts of the administration to continue to make the case for CDFIs. OFN is planning to be a part of an application, but what that looks like is still up in the air since EPA is designing the program. We are working with many different partners and organizations, and we'll keep all of you informed as we learn more from EPA. We're also tracking other green programs that were created in the Inflation Reduction Act or just new funding that's available for green lending and climate programs across the federal government. Next slide, please. Now turning away from the administration for a little bit to Capitol Hill, we do have a new Congress that was sworn in January. So next slide. The new Congress, 118th Congress, convened on January 3rd of this year. There are conflicting priorities in Congress this year. So the Senate remains in Democratic control, and the Democratic majority in the Senate actually grew in the election this past November. However, in the House, it has flipped from Democratic control to Republican control. So there are going to be some differing priorities between those two chambers. House Republicans, and Defina already alluded to this, are committed to cutting spending, and so it will be a challenging year for budget increases. And they're also very interested in oversight and investigations into what the Biden administration has been doing and several new programs. They are already, I believe, just today debating on a bill that would aim to roll back several Inflation Reduction Act programs, including the Greenhouse Gas Reduction Fund. We don't believe that this will go anywhere in the Senate, and the president would not sign it at this moment, but that's where their focus lies. And then even stepping back a bit from the conflicts between the two chambers, as demonstrated by the speaker election this January, where it took House Republicans over a dozen rounds of voting in order to elect the speaker, there are also differing priorities within the Republican caucus that they will have to contend with. Next slide, please. So with a new Congress, there's new leadership on various committees. So we're just going to kind of quickly go through some of our key committees in the House and the Senate and new leadership or membership there. So the committees that we're going to cover are appropriations, which oversees federal spending and particularly the Financial Services and General Government, or FSGG subcommittee, which has control over Treasury's budget. Financial Services deals with the authorization for a lot of CDFI programs, banking administration, housing, several of those priorities. Small Business obviously oversees small business programs. And then Ways and Means is the tax committee on the House side. So authorization over tax credits that CDFIs use, like the New Markets Tax Credit and Low Income Housing Tax Credit, some new proposals that are out there, is in the purview of the Ways and Means Committee. So if we go to the next slide. For appropriations, we have Kay Granger from Texas and Rosa DeLauro as the chair and ranking member respectively. And then on Financial Services and General Government, we have some changes in leadership. So Steve Womack from Arkansas is now the chair of that committee, and Steny Hoyer recently stepped down from his position in House Democratic leadership and has returned to the Appropriations Committee and has taken over that ranking member position. Next slide. These are the members of that FSGG subcommittee. So these are the members of Congress that have the most direct say in writing that spending bill for those agencies, including Treasury. There are several new members, particularly on the Republican side, and the committee is a little bit larger this year than it has been in years past. Next slide, please. So for the other key committees, for House Financial Services, Patrick McHenry is now the chair and Maxine Waters has moved to be ranking member. For Small Business, Roger Williams is now chairing and Nydia Velasquez is now the ranking member. For Ways and Means, Richard Neal moved to the ranking member position with the change in leadership. But excitingly, with Jason Smith in the chairmanship, Ways and Means had a competitive campaign for who was going to get the gavel of that committee. It was not clear when Congress convened. There were several different members of Congress running for it. Jason Smith has been a champion of CDFIs and particularly the New Markets Tax Credit and making the New Markets Tax Credit permanent. So I think this is a positive development for the industry to see him take that role. Next slide, please. Next, we're going to move to the Senate. So again, with the Appropriations Committee, Banking, Housing, and Urban Affairs, we'll cover banking, housing, and urban affairs issues. So that's a lot of housing programs. Sherrod Brown, who will see his picture shortly, has been very focused on increasing the number of hearings that they do around housing issues, saying in previous Congresses that they've spent too much time on the first word in the title of the committee and not enough on the rest of it. Finance is the tax committee on the Senate side, and then small business entrepreneurship is a similar purview to the House Small Business Committee. Next slide, please. So for appropriations, we now have Patty Murray and Susan Collins in the chair and ranking member positions. And as you may have noticed, the chair and ranking member in both the House and the Senate are all women for the first time ever. So that's a new development this Congress. And then on the FSGG subcommittee, Senator Van Hollen remains in the chairmanship and Senator Haggerty has taken over the ranking member position. Next slide, please. These are the members of the Senate committee are largely the same. We have some changes with Senator Rubio joining the panel and Senator Heinrich joining on the Democratic side, but largely the same makeup of this subcommittee. Next slide, please. On these other committees, like I mentioned, Senator Brown remains chair. Senator Cardin and Senator Wyden are also still remaining in their chairmanships, and we have new ranking members on the Senate Banking Committee and on the Small Business Committee. Next slide, please. So one of our biggest priorities every year, and this year in particular, is around the appropriations process and ensuring robust funding for the CDFI Fund at Treasury. For fiscal year 2023, our current fiscal year, they finally reached an agreement on December 29th of last year, where the CDFI Fund received $324 million. As Noel talked about in his remarks at the beginning of this program, President Biden released his budget request on March 9th, so earlier this month, which provided $341 million for the CDFI Fund, which is a $17 million increase. And that includes a $10 million credit subsidy for the bond guarantee program. The budget also touches on other CDFI priorities. He mentioned the new markets tax credit. He mentioned the capital magnet fund. Beyond Treasury, there are also increases in funding proposed for several USDA multifamily housing programs, the home program and CDBG programs, community development block grant program at HUD, increased funding for the Minority Business Development Agency. Lending levels of several SBA programs are increased in the budget, including the 7A program, and a lot of positive implications for the CDFI industry in this proposal. Next slide, please. However, the president's budget is largely just a messaging document. It does not have any legal weight, and it is ultimately up to Congress and those appropriations committees that we talked about earlier to set the spending levels for the federal government. So as you know, for the spending environment, Republicans are currently committed to marking up their spending bills or drafting their spending bills to fiscal year 22 levels, so rolling back significantly spending, and that would mean significant cuts across the board. Several Republicans have also indicated that they do not want to cut any defense programs, so that would mean steeper cuts to non-defense programs such as the CDFI Fund and others. It's going to be a very challenging year. As we talked about earlier, even within the Republican caucus, there's conflicts about how things should go in the House. The Congress pretty much never finishes their appropriations process in time for the start of the fiscal year on October 1st, but we are expecting a extended negotiation process this year. There will likely be several continuing resolutions, the potential of even a full year continuing resolution if they can't reach an agreement on spending levels. I've also, just today, we're seeing a lot of discussion around the debt limit and how that might impact spending levels. And Speaker McCarthy has sent a letter to the White House demanding that they negotiate. In particular, one of his demands is to roll back spending levels significantly. But next slide, please. So in addition to spending, there are some other pieces of legislation that have been reintroduced this Congress that we are following. They're all bipartisan bills, and all of these bills were introduced in the previous Congress, but they've now been reintroduced, at least on the Senate side. None of them have House companions as of yet, but I believe they all will. So the New Markets Tax Credit Extension Act would make the New Markets Tax Credit permanent and index the allocation to inflation. The CDFI Bond Guarantee Improvement Act would help make some changes to the program to make it more accessible, including lowering the minimum bond size. It would reauthorize the program and make some other changes to help make it a little easier to use. And then the Neighborhood Homes Investment Act would create a new tax credit to help support investment and development and renovation of single to up to 4-unit family housing in distressed neighborhoods across the country. So next slide, please. Finally, another exciting development in Congress is late last year, a caucus on the Senate side was created, the Senate Community Development Finance Caucus, co-chaired by Senator Mike Crapo and Senator Mark Warner of Idaho and Virginia. This is a bipartisan caucus that has now grown to 18 members. They're very active. They've had several briefings. OFN has participated in some. Our members have participated in others. They're really looking to have a forum to educate congressional staff and members about CDFIs, to discuss policy proposals and ways they can all work together in order to actually get something done to benefit CDFIs and the communities we all serve. This caucus is a great resource for us and a great way to connect with senators about the work that we are all doing. Now we're going to turn it over to my colleague Sophia, and she is going to touch on some of the ways that you all can get involved in being a voice for CDFIs in DC. So I'm going to hand it over to the newest member of OFN's public policy team, Sophia Gilkison.
Hi, thank you, Mary Scott. Yeah, I am OFN's newest policy associate. So we just wanted to share some new OFN resources to help you all engage in federal advocacy right from your home. Obviously, the policy team is here in DC advocating for the CDFI industry, but you're experts on the ground actually deploying these federal programs and funds. It makes a huge impact for your members of Congress to hear directly from you guys as constituents of their districts. As Mary Scott mentioned, we're in the midst of fiscal year 2024 appropriations lobbying, and we've put together a toolkit for you to use in your advocacy. The toolkit contains a template letter with instructions on how to make the ask to your members of Congress directly. It can be found in our Policy Action Center on our website. The Policy Action Center also includes our fact sheets on our policy priorities, CDFI Fund programs, affordable housing, green lending, and more. Our Policy Action Center also contains all of our past comment letters and a list of current open comment periods, a few that we've discussed earlier in this presentation, and we'll be keeping those up to date. Slide, please. Lastly, we encourage you to follow along with OFN resources. You can read about us in the news, follow us on our social media, keep up with our blog, and more. This slide has links to all of those resources, and we'll be sure to share it out in a couple of days. Last slide. Now last. Please keep up with us. This is our policy team. You got to meet Dafina and Mary Scott. Our contact information is on this slide, and you can also find it on our website. So now we will open up for a Q&A.
Thank you, Sophia. So it looks like we have a couple of questions that have come in about the Capital Magnet Fund that I'm not sure, we may or may not be able to answer some of them, but Mary Scott, do you have any insight into what some of the budget proposals are around, fixes to the Capital Magnet Fund might be?
Yeah, so there's some budget proposals, but like you mentioned, I think there's going to be some opportunities to weigh in on other changes to the CMF program. Essentially, it's similar to what I was talking about with the BGP, different pieces, but making it a little easier to access, easier to use, just trying to improve the program to make it a little more accessible. I know there's also a question about whether credit unions are not winning the awards. I think there's been a lot of issues with being able to access that funding. That funding level goes up and down. It's based on what is transferred over from FHFA, from Fannie and Freddie each year. The Treasury is also looking to try and even out those funding levels between years. So we don't even really know necessarily year to year how much is going to be available and how competitive it might be. So I think there's going to be several opportunities moving forward to weigh in on what we would like to recommend to Treasury. I know the Capital Magnet Fund Coalition has a letter that they've put together that OFN has supported with several suggestions, so happy to share that out with people as well. And I do see a question on why they didn't fully spend last year's CMF funds. So that's that smoothing that I just mentioned. They did not explain this before the funding round, but essentially they knew that through the activity of the housing market that the transfer for this year would be lower, and it is significantly so. And last year was a record transfer. So they held back some of the funding and are going to add it to future rounds to help even it out.
Great, thank you. I see several questions coming in around the Equitable Recovery Program. So this is part of the $12 billion that came from the supplemental appropriations in December 2020. It's the last of that kind of pandemic response funding that's coming out of the CDFI Fund, the Rapid Response Program, and the ESIP program, or the other pieces. And this is the one and only funding round essentially for these grants. And we're expecting those awards to come out soon, which we don't have any more detail than that, but this will be an announcement of the winners and not necessarily not a new funding round for those dollars. We have a couple other questions that coming in around the presentation. So yes, we will make sure that the recording is available on our blog. Yes, we will make sure that you all have access to the slides, and you can also feel free to contact us directly. And we can send a PDF of the slides to you as well. Great. We'd love to answer. We have a few more minutes to answer any more questions you might have. Well, while we're waiting, we also just want to make sure that you all know that since we are based here in DC, if you are in the DC area, if you're coming in for conferences or for meetings, please feel free to stop by our office. We love to have guests. So come by and visit us at 901 D Street in DC. But OFN's policy team is also here to help you if you would like us to help you schedule Hill meetings or to help schedule agency visits. We can set those up for you. We can accompany you on them. We can help you with messaging and talking points. Just feel free to leverage us, and us being here in DC, we love to tell you what's going on here, but we're also here to make sure that you have a good experience when you're doing your lobbying here in DC. And as Sophia mentioned, you all are the best advocates for all the work that we're doing on the ground. So open invitation to all of us. All right, we have one last question about the bond and the Smith-Cleaver bill. So yes, OFN is supportive of the Smith-Cleaver bill was the one introduced in the last Congress that would lower the minimum bond size, as Mary Scott mentioned. And we are supporting that legislation again. We haven't seen bill text just yet, so we are waiting to actually see what's in the bill, but we are excited that there is now momentum both from the Treasury Department and on the Hill to make some reforms to the bond program. But we also have a broader suite of reforms that we would like to see on the BGP program around some of the over-collateralization and other kind of risk mitigation tactics. So we are hoping to be able to use this piece of legislation to help support our broader reform efforts on the Hill and with Treasury. So thank you for that question. All right, looks like with no more questions, I think we can say thank you all for your time this afternoon. And if we didn't get to your question, please feel free to follow up with us offline so that we can respond to you. But we appreciate your attention today, and we look forward to working with you more in 2023. So thanks, everybody.
Thank you.